Okay, guys, let's get going with this. Tuesday, the 27th of February, and the markets are fairly settled, fairly quiet, and that quiet sort of period is sort of coming, I think, in anticipation of Jerome Powell and his testimony that he's going to give before Congress in the next few days. He's got one today before the House Financial Services Committee, and then on Thursday towards on I think it's the Senate Banking Committee that he's speaking. So he's going to give his views pretty much for the first time, really. But the markets will be focusing on inflation and as a primary factor there, but also balance sheet reduction will certainly come up for Jerome Powell, and how Powell sort of comes across, I think, will be very important for markets going forward, because Powell's seen at the moment as being a basic continuation of Janet Yellen, and he's not expected to do anything too significant today, but yeah, it'll be interesting to see how he starts to set his stall out. So that is an issue, but also we've got inflation this week. Core PCE for the States, that is big. It's expected to be 1.5%, which is around about where it was last time. And any surprises, I think, could get the market juiced up again. So we need to watch out for that. In the meantime, though, we've got the dollar, which had that rally. I mean, last time I spoke to you, the dollar was around about 88, 89 area. And it had that sharp rally, and I said, well, it looks stretched again, and just watch out for this unwind. It's the unwound towards sort of 90 and just started to roll over again. And I think that this is your selling opportunity. There are several ways you can sort of look at this, but I think this unwinding move on the dollar is a move that is now going to start to come back under pressure. Now, dollar yen, I think, is probably the classic at the moment. Dollar yen, you got the downtrend, you got the overhead supply, the 107.30 to 108.30 area comprised within that downtrend. Yesterday's high 107.30, pretty much bang on. Market's struggling a little bit, and you look at the setup on the momentum indicators as well. I think it's selling into strength, and I talk a lot about bond yields and how bond yields have an impact on the markets. Not at the moment. Look at this. This is back to Q4 2016, so what's that, 15 months or so of market moves on dollar yen versus the yield spread between the 10-year treasuries and the 10-year JGBs. You can see that the 10-year the yield spread has a really, really strong correlation with dollar yen moves until the end of sort of 2017, really, when it started to sort of break down, and it's completely diverged now. You can see that yield spread, and you can see this again on the euro dollar. The euro dollar yield spread, the euro dollar correlation with the yield spread of bonds under 10-year treasuries is again, or has been historically, very strong, but again it seems to have broken down as a correlation in 2018. So the markets are not really paying attention to yield spreads at the moment. It seems to be that the markets are moving on other factors, and certainly I think the dollar has rallied recently, but I think it looks now ready to come back under pressure to the downside. You can see euro dollar, which unwound back towards that 22 area, 22 support, found the support 22.55. Was it 50? Yeah, 22.60, sorry. And started to find support again. And I think this is just an unwinding move within the bigger picture of the uptrend on euro dollar. So you're looking for sort of opportunities both on euro dollar and on dollar yen to buy on euro dollar and to sell on dollar yen. Generally speaking, I'm sort of looking at these markets thinking that dollar's under pressure, and I think euro and yen are looking pretty decent in terms of their performance. Sterling, volatility on Brexit. Brexit again coming back into play. Lots of Brexit announcements. You've got political announcements from the Labour Party yesterday. You've now got Theresa May to look forward to on Friday. But in between that, you've got the EU, which is expected to give its own sort of vision, I think, of going forward this week as well. So you could have some sterling volatility on the back of that. but generally speaking, I'm positive euro, positive yen. So my trades are sort of around that, really. So selling dollar yen around 107 to 107.30. Again, just zoom in here. 107.30 was yesterday's high. Basically around about where we are now at 107. And euro dollar, which although I haven't sort of written it, euro dollar could also be around 123, a decent one. For today, trading in front of Jerome Powell might be a bit of a risky play. Certainly would be a risky play, presumably. But I think that you can also look at Euro Aussie, which is playing in this range at the moment. But it's a range that I expect to hold and then use sort of weakness within that range. You could play this range, so buying into weakness within the range. What have I got here? 156.20 to 156.40 on Euro Aussie. I think Euro CAD is probably a better option at the moment, though. Really like Euro CAD. Trending higher, found support nicely yesterday, pulled higher. You got the strong momentum indicators across the board, and it's continuing to sort of post higher lows through this sort of breakout above 153.70. And the breakout above 153.70 really does open the way towards 160. Now 159.10. Initially that high from 2016, but 160 certainly looks on the cards, and I think that given that the euro is beginning to sort of find a bit of support against the dollar, looking good. I think CAD's dropped off in recent days, and interestingly also the Kiwi. I was speaking to someone earlier about Kiwi. Watch out for that because it seems to be trending lower, certainly on a near-term basis, and it's now sort of testing this uptrend. You've got these momentum indicators which bear kiss there on the MACD lines. That's not all that great. And if you sort of start to sort of roll over and close again back below 72.70, which was Friday's low, that would sort of start to find, I think, a bit of traction back towards that, maybe a retest of that kilo 171.75. You look at the near-term outlook on the momentum, it is corrective still. So this is the Kiwi chart is under a little bit of pressure, but as I said, I'm sort of looking at Euro Canada, looking like in the look of that. So sort of get this. I've got a couple of trades running on Euro dollar long and dollar yen short. They're slightly in profit, so that's not too bad. But Euro Canada, where's Euro Canada? Is it here? There it is. Right, so Euro Canada. So looking out for buying at 156.30. So I mean, you've got hourly chart here. Euro Kiwi, that is Euro Canada. Sorry, you got a little bit of a breakout as well above a pivot, 156.30. So that's not the worst area to start thinking about buying opportunity. 156 to 156.30 area. I think that would be good. So do it in half size, because have a bigger stop then. So do a penning order, buy limit, half size, 156.30 with a stop loss of, now what would, I think just below the 155, so 154.90. That would be below last week's low. That would be a key breakdown. That would be a small top pattern. So yeah, I think 154.90 on the stop. Take profit 160. Buy limit, pending order, half size, place. Okay, so done that. Now, the other one I'm looking at is gold. I really like the way that gold is beginning to find a bit of support, starting to track higher lows again. I think 1330 looks pretty good, and then you got the stop. So the support at 1320. So I haven't done a trade on gold for a while, so let's get. I like it. Pending order, and again I'm going to do 0.1. So buy limit at 1330, 1319. Give it a little bit of room. And where would that be going towards? 1330. I mean, I think 13. I think it's going to be sort of coming up to certainly 1344 and beyond that in due course. So I sort of retested that high, 1360, 1361. Profit, 1361. Okay, so we got that on that. Already got dollar yen short. So 107.30, I think 107 to 107.30, anywhere in between that, anywhere around that. I haven't got a take profit. I've got a stop loss at 108.50 on dollar yen, which is sort of above 108.30. But you could have a tighter stop at 108 figure, 108.10 maybe. Give it a little bit of room above 107.90. You could tighten that up. And on euro dollar, you could have the sort of anything around here. This consolidation, buy this consolidation, and then have a stop below 22 figure. I think, because that would complete a top pattern if that were to be seen. So it's I think there are options at the moment. Now Jerome Powell is going to be, as I said, creating volatility this afternoon. That needs to be considered. But generally speaking, my long-term arguments for selling the dollar all remain in place. Twin deficits that are getting worse. You've also got just the fact that the market is sort of factoring in the late cycle aspect of the Fed moves. Any acceleration in Fed tightening will be driven by spiking inflation, and the market's not going to view that as dollar positive, I don't think. So all different reasons why I think the dollar is under pressure. Again, certainly against the euro and the yen. Sterling Brexit is such a volatile factor. I think that we need to just be careful of, really. Anything sort of Brexit positive is going to be sterling positive, but to be honest, it doesn't look as though that the Tories are getting too much positivity out of Brexit anymore. And certainly, I think sterling is sort of a bit struggling at the moment, a bit underperforming. Now, the question would be whether the indices are still a play. Now, I mean, you look at how the massively impressive rally that we've seen in Wall Street. You compare that to DAX. I mean, what is the DAX doing? That's just, I mean, I don't want to use the word awful, but it's so disappointing. The markets in Europe have just been utterly just, well, disappointing in the fact that the S&P 500 is above its 61.8% fib level of the sell-off. DAX is now sort of looking back towards 23.6% fib. FTSE 100 just sort of struggling to really get any traction at all. So DAX and FTSE just disappointing. I mean, you could argue sort of you could do a hedge, I suppose, long S&P, short DAX, something like that, because it certainly seems as though the S&P 500 is outperforming DAX, and that looks to continue. Scott, just a message from Scott Pickering. Isn't that on EuroCAD? Is that not an ascending triangle? Sorry, an ascending wedge that would probably break lower. Oh wow. In my opinion, I'm always a little bit concerned about patterns like that. I mean, it is more of an uptrend channel, I think, than a wedge. Yeah, I'm always a bit concerned about where I've never really taken wedges all that well. I think because you can read them both ways, and it's just arbitrary. exactly which way you want to look at them. But that's just my opinion, whether that is the case or not. But you look at that, I think that's a pretty decent uptrend channel, really, that you can draw in on EuroCAD. So yeah, I'm taking that as a sort of a move that's going to break higher above that. I hope that helps you, Scott. But again, that's just my opinion, and the sort of opinions make up a market, don't they? So yeah, but I think that's more of an uptrend channel within an uptrend channel as well. So you've got a couple of uptrend channels there, medium term and shorter term as well. So I'm sort of looking at as a positive move within an uptrend channel. But yes. So sorry, back to my longer term looks. Yeah, still looking at that. Still looking at JGB yields to break out above 0.1%. Gold, yeah, continued dollar weakness is going to underpin gold. And I've got here DAX, bulls regaining control, but slowly. Is that even the case? I mean, sort of the way it's just fallen away, it's now 80, 90 ticks up. I mean, it is an uptrend channel, but yeah, it's just disappointing, especially considering how the S&P 500 and the Dow have absolutely taken off. You would argue that's a bull flag pattern as well. That's likely to now probably mean a retest of the highs. In fact, certainly if you get above 76.4% fib on the S&P 500, so it's looking pretty strong. Look at the momentum indicators as well. Bull kiss on the stochastics, bull cross on the MACD lines, RSI accelerating strongly. So it all looks good, really. All looks good. So yeah, but not in Europe, because you get the currency aspect as well. The indices underperform due to the fact that the currencies are strengthening against the dollar. So that plays a role there. So yeah, so thank you very much for coming today. We've got another one on Thursday. Now, I hasten to add, it is snowing, and I live in Brighton, and Brighton is ridiculously hilly. So if I can't get out of Brighton, I might struggle to do the webinar. But yeah, I'm certainly hoping to get in on Thursday. But yeah, as soon as you get a little bit of snow in the UK, the whole thing just grinds to a halt. But anyway, that's life. Quick one from Gordon. I'm just going to look at the Dow hitting 26,000. Let's have a very quick look at the Dow, because I don't often look at the Dow. I mean, I do it every day on the on my morning report. However, not in the webinars. So yeah, Dow. I mean, broken out. Look at those three accelerating bull candles. Again, strong momentum indicators. Similar chart to the S&P 500, really. Above 25,850 is 76.4, and then you're looking at the highs again. But once more, you could argue, is that a bull flag pattern? It probably is. And then you'd sort of measure. If you're going to do flags, let's do it properly. So we're going to do add trend line fib projections. You go bang, bang, bang. Yeah, 100%. You can't. I hope you can see that. It's annoying colours. I know. 26,850. Around about that. So yeah, that is a bull flag, I think, on the Dow, and it looks good. So yeah, so you got that breakout at 25,432 as support now, Gordon. So yeah, buying into selling pressure. Yeah, I'd say that. You've had 3 strong days now, so you might start to run in a little bit of intraday selling. So yeah, watch out for that. But yeah, that breakout support 25,432 is decent to watch. So yeah, okay. With that in mind, thanks a lot for coming on today, guys, and I will speak to you again on Thursday.